Folks, this is not investment advice, but history suggests commercial stage oncology focused biopharmas with relatively recent FDA approvals are likely candidates for acquisition. This video will focus on all 9 such bios with market caps ranging from $500 million to $5 billion. We believe someone should be profiling this peer group, so it may as well be us. We apologize in advance when this computer-generated voice mispronounces names. This table here lists all 9 with this market cap profile sorted largest market cap to smallest. Here you see the date of their first approval. In this column we show the entity's market cap as of the weekend of September 28, 2024, then cash and debt as of the end of Q2 and the resulting enterprise value. All amounts are in millions. Day 1 cash includes the upfront payment received from Ipsen for non-US rights to Ojemda and its July pipe. Remember, Q3 is also essentially done. Obviously, cash amounts as of June 30, 2024 do not consider Q3 2024 cash burn. Actually, let's also look at the 2026 revenue multiples for all 9. Here in column C, we note current 2026 analyst consensus revenue estimates and next to it the number of analysts in the consensus. The last 2 columns show their market cap, reflected in columns A, and enterprise value, as noted here in column B, as multiples of their 2026 estimates shown in column C. 2026 estimates come from Seeking Alpha as of the date of this video. We will cover these multiples in a later video. Okay, moving on. The graphs to be presented will be screenshots from Yahoo Finance, and hence the share prices are on the right side and the graphs are not to scale. Let's start with Iovance that closed yesterday at $9.61 a share, yielding a market cap of $2.9 billion and an enterprise value of $2.5 billion. Iovance's lifileucel was approved last February as a second-line therapy for melanoma. Looking at this graph of their stock over the last quarter, you may remember on August 8 Iovance reported a 27% Q2 revenue beat and provided eye-popping preliminary 2025 revenue guidance of $450 to $475 million. Iovance shares surged from $8 a share before reporting hitting $12.50 at its peak 2 weeks later. Iovance shares have retreated since, but the graph suggests some support at roughly $9. Folks, again at $9.61 a share, Iovance's market cap is just over 6 times the low end of its 2025 guidance, and its enterprise value of $2.5 billion is just over 5 times its guidance, shown here as dividing the amount in row A by the range of guidance in row B. Also, don't forget Iovance filed for EU approval at the end of last quarter and has a major data read in non-small cell lung cancer soon. Iovance is expected to report Q3 actuals in 5 weeks. We'll see what happens. Iovance has 300 million shares outstanding, so every $1 in share price is a meaningful change in market cap. Next up is Geron, whose imetelstat or Retalot was approved just last June 6 for certain myelodysplastic syndromes, which is a blood cancer. Again, Yahoo Finance reports the share price on the x-axis on the right side. You see on this 3-month graph of their share price, Geron has traded between $4.20 and just under $5 a share. Perhaps big picture one could think the trend is lower. You decide. Perfiers Pharma, Evaluate puts imetelstat or Retalot sales in 2028 at just under $800 million. Goldman Sachs 3 days ago has peak sales at $1.2 billion. Imetelstat has patent protection through 2033 and has filed for extensions that, if approved, would protect it until August 2037. Imetelstat is also in a phase 3 trial for refractory myelodysplastic syndromes. An interim read is not expected for 2 years and the full read until 2027. If ever approved, the imetelstat opportunity would be roughly doubled. Last, a phase 2 trial was recently paused. There is speculation on why. Some believe it could be due to very good news that, if true, would have a meaningful impact on valuation. Investors could learn in November. Of course, it may not be good news either. Now, we noted Iovance had 300 million shares outstanding, Geron has 660 million between shares and pre-funded warrants. Time will tell. Next up is Immunity Bio, ticker IBRX. Folks, the brutal truth is we do not follow IBRX very closely as there appears minimal analyst coverage. We do not understand why, so if you, one of the 40 people that may ever watch this video, know the reason for the limited coverage, please leave a note in the comments. Immunity's Anktiva, and yes, sometimes we use the drug name and sometimes the brand, but Anktiva was approved last April. Anktiva is prescribed with BCG for patients with BCG unresponsive non-muscle invasive bladder cancer. As you see on this 6-month graph, again share price on the right side, IBRX peaked shortly after approval at over $10 a share but has since retreated to between $3 and $4 a share, down 60 to 70% since peaking. Let's go to a 3-month like the others. IBRX hit a low in early September, but since the bleeding has stopped, at least for the time being. Again, we do not know much about IBRX, but simple observation suggests IBRX's decline may have leveled off. Again folks, just for the record, this is not investment advice. This video is for entertainment purposes only. Next is our favorite SpringWorks Therapeutics. Take what we say about SpringWorks with a grain of salt because we now own considerable SpringWorks at its current price. SpringWorks Ogsiveo was approved just after last Thanksgiving for desmoid tumors, the first ever approval of its kind. SpringWorks is one of 5 companies that handily beat analyst sales estimates both quarters year to date. Last August 7, SpringWorks reported $40 million in Q2 sales, which is a $160 million a year run rate. SpringWorks CEO is adamant Ogsiveo is a $1 billion a year therapy in the United States. Immunome just published updated phase 2 data on a potential Ogsiveo competitor therapy but, if ever approved, would not hit the market until 2027. SpringWorks just filed a second BLA for its Renew therapy for children and adults with neurofibromatosis type 1, we'll call it NF1. AstraZeneca's Koselugo was approved in April 2020 for NF1 but for children only and reported over $300 million in 2023 sales. Listen to SpringWorks' presentation on Renew versus Koselugo for yourself but, very simply put, the clinical data one versus the other appears clear. SpringWorks reports there are 3 times as many adults with NF1 than children as well. This does not mean Renew will sell well if ever approved but, with that profile, one can reconcile why Bank of America analyst Alex Stranahan forecasts $1.5 billion in peak Renew sales. Renew's drug is called mirdametinib. Looking at SpringWorks over the last quarter you see the classic M-type trading profile where the graph looks like an M. Recall SpringWorks' last trade before reporting the Q2 beat was August 6. SpringWorks shares surged from 33.22 on the 6th to as high as 43 intraday on the 26th and 27th before trading right back down. Now of course we have no idea what will happen to SpringWorks from here but it does appear there's some support around where it closed yesterday. Do we later see a W instead of an M? Who knows, but SpringWorks is expected to report a phase 2 data read in Ogsiveo for certain ovarian cancers, roughly 5% of all ovarian cancers, before the end of the year. SpringWorks is also a 40% partner in MapKure with Beijing studying brimarafenib in solid tumors with BRAF mutations. Next on our list is Syndax Pharmaceuticals. Syndax and its 50-50 partner Incyte saw its Niktimvo approved by the FDA for graft versus host disease on August 14, 2 weeks before PDUFA. Before that news, on July 29 Syndax's second therapy called revumenib, that had a September 26 PDUFA date, reported the FDA extended that date by 3 months. So much for priority review. To consider Syndax's hypothetical value potential, investors should compare Syndax's 50% share of Niktimvo to Kedman Holdings' Rezurock. Here are the clinical profiles side by side. Now we are not clinicians but my goodness they are practically identical. Kedman was acquired for $1.9 billion 7 weeks after Rezurock's FDA approval back in 2021. Syndax's revumenib is often compared to ziftomenib from Kura Oncology. In any event, Syndax has traded lower since all of this news but perhaps one could see some support at 18, at least until its next catalyst. Now we would guess, and that's all it would be is a guess, that Incyte is an obvious takeout candidate as its JAK5 patent expires in 2028. However, we'd note Incyte just acquired its 50% share of its MorphoSys partnership before they were acquired and just invested $2 billion on share buybacks. It was reported 2 months ago Incyte completed a quote-unquote strategic review. Perhaps Incyte is looking to sell itself. Of course the 3 of us here at Night Owl have no idea what will happen to any of these biopharmas. Next up is Immunocore. We see Immunocore has consistently traded lower since the middle of July where it traded for $41.50 a share. It gets worse looking at Immunocore trading year to date. Immunocore was trading for $75 a share back in early February. Going back to our 3-month view we see Immunocore closed yesterday at $31.40 a share. Are we seeing support here or are more losses coming? We wish we knew but at $32 a share, Immunocore has a market cap of $1.6 billion and an enterprise value of $1.15 billion. Recall Immunocore's Kimmtrak was approved back in January of 22 for certain uveal melanomas. On August 8 before the open, Immunocore reported $75 million in Q2 Kimmtrak sales, in line with estimates. This is a run rate of $300 million a year. Hence, at $32 a share, Immunocore's enterprise value of $1.15 billion is 4 times Q2 annualized sales, shown here as amounts in row A divided by annualized sales in row B. Some may say this means the market is ascribing zero value to its pipeline and or limits material downside from here. Again, this is not investment advice. Immunocore is running 3 phase 3 studies, 2 for Kimmtrak and 1 for brenetafusp in first-line cutaneous melanoma. We'd add a phase 1 data read is expected for brenetafusp, and please excuse our computer-generated voice hacking these names, in non-small cell lung cancer in Q4 and a third candidate will report data in HIV in Q1 2025. Of course you the investor must decide Immunocore's risk v reward profile for yourself. Day 1 is next. Day 1's Ojemda was approved last April and over the last 90 days has traded between 13 and 16 a share but appears to have settled in the low 14s lately. This graph make them appear more volatile than they really are. Incidentally, of the 96 non-big pharma commercial stage biopharmas we track, Day 1 was the first to report Q2 2024 sales and earnings. Hats off to them for being first. In any event, recall on July 25 they announced they sold non-US rights to Ipsen. On July 30 Day One reported 8 million in Q2 Ojemda sales, 6 of which they say came from patient starts versus inventory builds. This was an 800% beat. By comparison, Immunity Bio's Antiva was approved the very same day but only 1 million in Q2 sales. Hey, it will be a distant memory years from now but does suggest Day One was fired up and ready to go, at least versus Immunity Bio. Concurrent with the beat they announced a 175 million pipe at 14.50 a share. Now yes, Day One's share price fell big time in the days that followed but that was consistent with a 7% drop in the XBI between August 1 and 5. We'd note in our enterprise value calculation, we add the Ipsen upfront payment and proceeds from the pipe to Day One's June 30 cash, so Day One coffers total just under $650 million, more than half of its market cap. Fierce Pharma provides a great article on Ojemda's commercial opportunity. Long story short, most believe Ojemda should do between 500 and 750 million at peak in the United States. Our simple point is Day One's market cap and enterprise value are 2x and 1x, respectively, the high end of its peak sales estimates. Next is Y-mAbs Therapeutics. We do not follow Y-mAbs in any detail. Their Danyelza therapy was approved in November 2020 for pediatric neuroblastoma and does roughly 20 million in sales a quarter. Y-mAbs has an Danyelza expansion study for osteosarcoma with a data read later this year. Y-mAbs had a second therapy that the FDA did not approve in December 2020. We cannot tell you much more, but for all we know there is much more. You can see Y-mAbs traded much higher after reporting Q2 sales in line with estimates before falling off. We suspect the drop was consistent with the XBI but we cannot be sure. Again, we are otherwise not familiar with Y-mAbs but it is technically a candidate in this peer group. Last but not least is Urogen. Urogen's Gelmito was approved in April 2020 for certain bladder cancers. Gelmito's internal name at Urogen is UGN-101. Investors may remember Gelmito expectations were very high at the time of the launch. Endpoint News at the time cited a stifle peak sales estimate at 375 million. An article in The Motley Fool at about $500 million. An article in BioWorld quoted an analyst peak sales estimate at almost 700 million. Gelmito sales are running roughly 20 million a quarter or 80 million a year. This is a textbook example of why caution and skepticism is wise when listening to analyst peak sales estimates. In any event, and we are going to look at Urogen over the last 4 months. On June 13, Urogen announced final results of its UGN-102 candidate. The stock soared 65% from 12 to 20. Again, we're looking at the last 4 months. A few days later Urogen closed a $100 million equity raise at $17.50 a share. However, you can see Urogen has trailed right back. Urogen just completed their NDA for UGN-102 in August and anticipates approval in 2025. Urogen pegs UGN-102's opportunity at 10x Gelmito. Nonetheless, the hype seems to have abated. Urogen closed at $12.90 a share. This is not quite, but almost $5 less than the accredited investors paid 3 months ago, roughly 26% less. You know we don't like to do this, as we are not clinicians, but let's quickly compare Y-mAbs to Urogen. The market caps are identical and yes, Urogen has a more complex capital structure with 2 debt facilities but their enterprise values are within $100 million of one another. This graph compares the quarterly product revenue of the two side by side. They are more or less identical. At the same time, Urogen has just filed a NDA for UGN-102 that, yes of course if approved, would compete in a market supposedly 10 times higher than Gelmito. Y-mAbs has a very respectable pipeline but, as we understand it, no significant near-term catalysts as Y-mAbs analyst forecasts are for more or less flat sales the next 3 years. Perhaps this is why Urogen has an enterprise value $100 million higher but one might think it could be higher. Again, accredited investors purchased $100 million of Urogen stock 3 months ago at a $1 billion market cap. What do you think? Okay everyone, that's all 9. This was not investment advice and certainly was not a CNBC Eat Your Heart Out review, but we felt someone should be covering this peer group so we will try. Now recall we posted this worksheet that followed what happened to all 60 biopharmas after they received their first oncology-focused FDA approval. It is sorted by PDUFA date going back to 2011. This section shows information around the approval, again including relevant dates, and this next block shows those who were acquired, the number of months since approval and the gains in green. You see roughly 1 of every 4 through the end of 2022 was acquired but there's been nothing yet for the most recent. We suspect by the end of 2025 at least 2 of these 9 will be acquired we reviewed will be acquire, if not 1 or 2 more. Of course we could be wrong. Thank you for watching our video. Please take a moment to follow us. Good luck to all of us.